So welcome to the technical session, which is entitled Celebrating 50 Years of Regional Rural Banks Movement in India. 5 decades ago, while commemorating the birth anniversary of Mahatma Gandhi, the father of the nation, India launched a special class of financial institutions in the form of regional rural banks on 2nd October 1975, with a network expansion plan over the subsequent years to empower the rural masses, in particular small and marginal farmers, artisans, and small and micro enterprises through effective financial inclusion. So in this session, we will delve deep into the current status of the RRBs and the future course of action. And now I take the pleasure of inviting the esteemed panel to please join us on stage. This session is being moderated by Mr. Gaurav Gupta, sector expert. The esteemed panelists for this session are Mr. K.S. Raghupati, former Chief General Manager, Department of Supervision, National Bank for Agriculture and Rural Development, that is NABARD; Dr. Rakesh Malhotra, Independent Consultant; Ms. Swati Chaudhary, Vice President, Network Development and Advocacy, South Asia Women's World Banking. Let's welcome them onto the stage with a round of applause. A very warm welcome to all of you. We look forward to an insightful discussion. With this, I hand over the charge of the session to Gaurav. It's over to you.
Very good morning to everyone present here in the hall today. It's very kind of Access to invited me to moderate this panel. A very distinguished panel. We have a couple of experts on the panel who've been on the side of the supervisor, who worked very closely with regional rural banks over the years and spent a lot of time in the development space. Shri Raghupati on my immediate left and Shri Rakesh Malhotra. They both had exposure directly working with regional rural banks. And to my far left, Ms. Swati Chaudhary, who's been in the development space for a fairly long time, and she's currently associated with an international NGO, Women's World Banking, who've been very active in various discussions through this entire forum. It's very kind of Access to call me a sector expert. I would like to believe that all the experts are on my left. I'm happy to be moderating this session. So I got the opportunity to think about the question of RRBs a few years back when Vipinji was kind enough to ask me to write a chapter on the performance of RRBs over the years and evaluate what they have done, what should be the way forward. But that's where the expertise ends. I have experts here on the panel whose collective experience far outweighs what I would hope to learn about RRBs, and I'm looking forward to this session to learn from our panelists today. So whenever I've thought about RRBs, a famous line from a Bollywood movie comes to mind: "Zindagi badi honi chahiye, lambi nahi." That's a dialogue from the movie Anand. I'll just take a couple of minutes to just to set context. Perhaps the only one on the panel today who will use some notes. Others will speak from their experience, but yes. So when RRBs were created nearly 50 years ago, the main idea was beautifully simple. गांव का पानी गांव में, गांव का पैसा गांव में. The idea was not merely to create another institution, another category of banks, but to design an institution that combined the local familiarity with banking discipline. Something cooperatives struggled with and commercial banks could not fully offer in rural India. Over the decades, RRBs have lived a somewhat paradoxical life. On the one hand, they have been among the deepest drivers of financial inclusion, whether in rural branches, SHGs, women borrowers, or aspirational districts. On the other hand, they've often been judged using a purely commercial lens, where their performance appears uneven. This creates a fundamental question then: are RRBs underperforming banks, or are they being evaluated against the wrong benchmarks? Rural India over the years itself has changed quite a lot. Agri is no longer the only source of livelihood in rural areas. Non-farm activities, migration-linked incomes, and services now define rural economies. Yet the risks remain very high, margins thin, and shocks frequent: climatic, economic, and social. So today's discussion is not about nostalgia, nor is it about defending institutions. It's about asking a very practical question: what role should RRBs play in India's next phase of inclusive finance? And what must change in design, in incentives, or in expectations for them to play that role efficiently? With that framing, I look forward to drawing on the experience in this in this uh, in this discussion to reflect not just on the past 50 years, but on the choices ahead. If I can now request the panelists to make their introductory remarks on some thoughts about RRBs. RRBs sit at a fascinating intersection of local knowledge, public ownership, and development mandate. As we mark the 50 years, the real question is whether RRBs is not whether RRBs have survived, but how would they evolve going forward. So this discussion, we can take this discussion in sort of three blocks to draw on your expertise. The first block would be, we can start off by your introductory comments on what were the purposes you think for which the RRBs were set up in the first place. Uh, Intention need not have translated into outcomes, so where do we see RRBs today, and what is the way forward? I think that's where we would like to spend most of our time discussing what are the kind of opportunities in this space, and what is it that we expect RRBs to do going forward in the evolving landscape in rural areas. May I request Raghupati ji to please share his introductory thoughts on this?
Thank you, Gauravji. I thank Access for giving me this opportunity. I also thank all my panelists. Good morning, all of you. Celebrating 50 years of RRBs is a great occasion for Indian banking system and a rural banking system. Look at 1976 when the first RRB was formed. The whole banking sector was in expansion mode. A lot of branch licensing was being given, a lot of branches, commercial bank branches were being opened. Cooperative banks were also being given a lot of push. At that time, government thought that they need an institution which is totally rooted in the rural areas, which will implement my programs. To draw a level, IRDP was the flagship program of the government, and RRBs, you can easily say, it was meant to implement IRDP in a very intensive manner. And they kept the cost low. They had very clear vision that this has to be a low-cost institution which is rooted in the rural areas and which will connect with the rural population. I would say in 50 years down the line, they have almost 70-80% of the objectives they have fulfilled. Shortcomings will be there, but that we will discuss as we go along. But with this introductory remark, I will say, congratulations to the entire setup of Government of India, starting from Government of India till the last employee of the RRB, that the 50 years has been an excellent journey.
Absolutely. Thank you so much, Raghupati ji, for your introductory remarks. Rakesh ji, you won different hats within the development space, even within, during your time at NABARD. How would you like to frame this particular response?
Thank you, Gauravji. First of all, thanks to Access for including RRB as one of the important sessions in this financial inclusion. Because I believe in India, without RRB being talked about, financial inclusion story cannot be complete. I come with the experience of NABARD. I was also a director of RRB for 6 years in Bareilly when I was a DD member there. And I was also a faculty member at BIRD, where we used to do a lot of exercise with RRB and also ODI, which was initiated a long time back. And again, I thank Access for having taken me on board for a very important study, which they just have done for NABARD. 50 years of RRB is a story which they are writing, and I think soon the publication is going to come out, in which we had visited 6 RRB recently, and we had very interesting inputs. And we also churned out a lot of data based upon the June 2025 analysis we have done. And a lot of interesting things are going to come up. I believe RRBs, which have come down from 196 to 28, have a long story to go. And we are going to see a different landscape of financial institutions in the near future. Thank you. We'll discuss the things as we move along. Thank you.
Great. May I now invite Ms. Swati Chaudhary to share her perspective on this, I mean, the great topic. I mean, again, I'm glad Rakesh ji touched upon that it's really wonderful that Access thought about giving RRBs a space here in this forum. Very important, and we would love to hear from you, Ms. Swati.
Thank you, and it's always great to come after two very eminent speakers because they've already provided a very large, in terms of a very important perspective on the role that RRBs played. The perspective that I'd like to build is, or share with you, is looking at women as a core customer segment. So if I look at RRBs from that perspective, one key intent with which they were built was, have an institution that understood the local economy, the local livelihoods, and the local households. And I think that is, for me, is the key thing that RRBs have consistently delivered on. If we're looking at low-income women and the institutions that continue to serve them, RRBs are very key. If I, just a couple of stats, they definitely outstrip the national average of percentage of women customers. They're close to 60%. So very core customer base. And the second thing is that they serve 20% of women across the country. And, from that perspective, it's been our privilege to partner with NABARD. And, as we speak, we've worked with all 28 of the RRBs on helping build the overall engagement story. So I'll just reiterate that, what my fellow panelists have said, that they continue to play a really important role. And we're looking forward to this next decade of both of rural innovation as well as data-driven action.
Wonderful. Thank you so much. So, I mean, it's quite clear that when RRBs were set up, there were some advantages that RRBs were supposed to bring to the table. There were some, reasons why they were set up in the first place. My question to the panel now is, did those, let's say, did proximity to the customer, and that's what RRBs do the best. I mean, they are where the customer is. Other banks could be thought of as outsiders going into rural areas and, acting more like an outsider coming into the rural spaces to provide banking solutions. But did this proximity of RRBs lead to better outcomes? Over the years, what has been your observations? What has been your, sense of whether things have worked out the kind of way that they were supposed to work out? Or they were planned to work out? Yes, please.
Look at any of the financial inclusion initiatives. Even before the financial inclusion term was coined, RRBs were into financial inclusion. You take SHG Bank Linkage Program or the Vikas Voluntary Vahini Program, which they took very seriously. And then I have a couple of examples where loss-making banks have turned around, RRBs have turned around with only 2 products, SHG Bank Linkage Program and crop loans. Look at any of the recent initiatives of Government of India where Jan Dhan account opening or micro insurance and all that. RRBs are in the forefront. So I would say given the rural connect, they have been able to reach out, they have been able to meet the requirements, although there could be still improvements, but still I would say they have been able to achieve better because of their rural connectivity.
Yeah, I believe the RRBs were conceived with the idea that the banking has to be brought to the doorstep of one and all at the ground.
Right.
And probably then, when the RRB were conceived, was the notion that the commercial banks were not able to reach the farmers or the rural areas. Their penetration was difficult, the costs were high, and so on and so forth. So basically, low-cost institutions were conceived so that banking facilities could be made available to one and all. And I totally believe my experience of working at the ground and also other data which we analyze, yes, they have met their objectives. They were started small in 1 or 2 districts, then the region, and now the state. Probably I believe they will go to the national level also. The idea of making a banking available to one and all has been achieved. Idea of making credit accessible to the farmers, that was something very critical in those times when we were thinking of that farmers should be able to get all the needs fulfilled in the financial sector. The innovations which over period of time which have been carried out through ways of KCC and other means have been very useful. And the journey has begun. They have already, half a century is quite a good time where they have reached a milestone where further takeoff will be taking place.
I'll just reiterate my point in terms of having a very large customer base where there is a strong customer connect. So, that as a lot of bankers in the room will recognize that that is the key thing for any banker. And, as we move into the discussion of what is the next 50 years or even the next 10 years have in hold for, RRBs have in front of them, we will see it's a constantly evolving landscape, and we'll see them emerge as very key players within that. I think that's the limited point that I wanted to make. I also wanted to bring in this one point about, RRBs being very open to a lot of insights and changes, and being the institutions who are very close to the ground to be able to display that kind of agility. Obviously, there are other enabling conditions as well, but I think that is a key strength that RRBs have.
That's very heartening to hear that RRBs are open to change. And but do you, in your work, Swati, do you find that there is some bit of resistance for certain reasons? And what might those factors be? Is it the sponsor bank relationship? Is it managerial capability? What is it that's still holding them back?
I would start with saying that we are talking about 28 regional rural banks in a really large and diverse geography such as India. So there are differences in various kinds of regional rural banks, with some regional rural banks definitely being more open and more technologically adept than others. I feel that the two key factors that impact how they grow. One is in terms of the last mile channel, and we all know how tech has come to play a very important part of that. So my last mile sourcing, how I built those learnings quickly into my products and processes, and finally tech becoming a very differentiating factor, and all the various initiatives that NABARD is taking in terms of making sure that the RRBs keep at pace with the tech, I think is going to start bearing fruit.
Great.
I'll supplement what Swati madam has said. See, resistance, I would rather say it is not resistance, but it is compliance. You are a organization which is structured within a framework, and you have copied to a large extent a commercial bank, and you have circulars, procedures, rules and regulations flowing down, and any extra innovation, it might be even seen as an attempt to fraud. So in that situation, it is very difficult to innovate. So now, it is in this context that there is a need for innovation, encouraging innovations and encouraging probably innovation driven by the digitalization so that there is enough leeway at the branch level to customize the products, customize the services.
Gauravji, challenge is always a part of any entity and growth. I'll narrate a true incident with when I was a director of an RRB. That time SGSO was launched and SSG linkage is one of the challenges which the RRB staff was very reluctant to go for. Opening of an SSG account was a challenge those days. Right. And there was one complaint coming from one of the blocks where I was working. I could simply have taken up my phone call and given a call to the concerned branch manager कि भैया account खोल दो. But I didn't do that. What I did is I told those women, they were about 30, 40, 50 women. They came in director and came to the head office of the RRB, made them come over there. I made the press also come over there, and that became an issue. And it became a local newspaper, and the DM and CDO, who is also on the board of RRB, it came to the light. That day, next I think 10, 20, 50 years, no RRB branch manager ever ventured to say, sir, I will not be opening an SB account for SSG. So challenges are always there, but there are ways and means how we overcome them. Even today, we are innovating and we are refining things, but yes, it will be always there.
Gaurav, I just wanted to quickly add just, as Sir shared this really interesting example, when we were working with Telangana Grameen Bank, with very limited resources, which is basically the head of IT and one consultant, they built this beautiful interface called Toogle. I mean, Google for Telangana Grameen Bank. And that worked as an interface to drive all active priorities for the bank. And I thought that was amazing about, how local innovation could really add to the overall profitability.
Excellent. Actually, you set the right base for my next question. I was about to ask, RRBs were set up to solve problems of yesterday. What is it that RRBs need to do? And before we get there in terms of what RRBs need to do to solve problems of tomorrow, what are the kind of challenges with the rural economy? Their presence is still rural heavy, and given their reason for existence, their presence is going to be rural heavy, while they will reach out to semi-urban and urban areas also for deposit mobilization and other things. What are the kind of challenges with the rural economy that you feel need to be addressed? Sir, with your years of experience, both Rakeshji and Raghupatiji, you've spent time closely with RRBs over the years. What have you seen as the key changes in the rural economy which need support, which are, screaming for support from an institution like RRB?
Rural economy has changed. If you look at the composition of the three major contributors to the economy, agriculture sector, which was predominant earlier, now it's around 15%, 18%. Whereas services sector and manufacturing may be around 20, but services sector has increased. And every family has a combination of income streams. It is not just agriculture alone. So there are entrepreneurs, there are budding startups, and there are opportunities for agro-processing. And now e-commerce has reached the rural areas. Technology is reaching rural areas. A lot of other banks, other institutions are using technology. So RRBs need to evolve, need to look at the ecosystem and then devise their own business models. They have to change. They have to see, entire market is now asking 34 baskets of ice creams, but RRB is giving vanilla ice cream. I say, I have only two products, one vanilla savings product and one vanilla credit product. You want it, take it, otherwise go. So people who wanted more, they have gone to the other institutions. Now, similarly, there is also a lot of people who are still left out. You don't have a mechanism for them. There are landless people, there are tenant farmers, there are people whose documents are not pakka. They are not eligible in your normal course. But you are meant for rural people. You are expected to cover all of them. How do you cover? You should have a strategy for them. SSG was one of them, but SSG itself is 30 years old. Can we think of a new product? That is where I recommend that every RRB should have a social banking cell. They should have a R&D. They should have innovations coming out. Innovation in products, innovation in processes, innovation the way in which we even deal with the people. Then another important thing is the meeting the entire credit requirements of the family. Have we assessed the credit requirements? Have we assessed the entire financial service requirements of a family? No, we have enough data. We are sitting on piles of data, but we are not making use of it. I think there is lot of things to happen. Banks are becoming bigger. Banks have become stronger. Now data is at their hands. Infrastructure is going to be built up, so they can definitely make use of this opportunity.
Okay, I think I'll partially agree with my friend Raghuji. Thanks again to Access for having given me the opportunity. For last 2-3 months we were in the discussing so many things with RRBs. I was astonished, I will again repeat it, I was astonished to see where the RRBs have evolved. They really have come up like anything. Rajasthan RRB, which I think I'll recommend anybody to go and see for themselves. The way they have come out with innovations, they open a branch which is competing with the HDFC and ICICI Axis Bank along with. They have come out with products. The chairman of the RRB has put up a call center in its own office who rings randomly to all the customers. If they have any complaint, that complaint is brought directly to the table of the chairman. So, and they are designing new and new products. Now, what UP RRB, which is one of the biggest RRBs in the country and probably bigger even than the Punjab and Sindh Bank, where they have made it that yes, the family would be the credit target for them. Now, whether housing, study, education, everything they're trying to understand, except the international remittances. RRBs still don't play in international money. But other than that, which they are thriving, and important is they are thinking on it. They are innovating on it. Now they have a lot of probably experience from the past, and the chairmen which have come up, they are also innovative. Yes, there are some problems, some bottlenecks here and there, but I feel the RRBs are on the right path. If proper thrust is given by the government and mentoring is done by NABARD, they would be a challenge for any commercial bank in the country in near future.
So you clearly think that the thrust has to be from the government and the policymaker side. The supervisor has to play an active role in their future. Great.
I agree. See, supervisor or mentor, owner has to play an important role. And here, probably in RRB case, it is the NABARD which has been in forefront and guiding many things. Chahe in selection, chahe HR issues, or operational issues, training, everything is there. NABARD is taking care of it. But now I was surprised to see in Uttar Pradesh RRB where they had a modern training center, regional training center, which is equipped with the latest equipment in the world.
Sure.
Better than even the bird which I saw. So if they are thinking on those lines, yes, so they are thinking on that point, yes, we want to innovate, we want to learn, we want to capacitate our staff. So this is what the new breed of RRB is there. Again, what the chairman or the people feel like, today all the chairmen are coming from the sponsor bank.
Right.
So the chairman is by default of what is linked to the loyalty of the sponsor bank from where is coming. The idea was mooted. Why not like other commercial banks? The chairman of RRB also are appointed by the government of India through open competition or whatever they feel like. So that will bring in autonomy. Okay, now I come from Bank of Baroda, but now I'm free from it, and now I can put all my whims and fancies over there. Being in a particular state, I have to compete or go by the dictum of my sponsor bank. So that can be diluted to a lot. But yes, even again, coming back to the Uttar Pradesh Gramin Bank, their corporate office was no less than any multinational company. So I was surprised because I have been in the RRB with so many years. The changes is very evident. They are gradually on the face. They need to be nurtured, supported, and guided to take the things further. That's one thing. Only yes, what Raghuji said, I agree with him, is there is a need for having an R&D in RRBs. Right. They are lacking marketing and R&D is two things. I think we are coming up with these recommendations in our report, which Access is going to publish soon, where marketing and R&D has to be there, an integral part of their business operations, so that they compete with everybody on the ground.
Great. So the message that I'm taking from this discussion is that while the supervisor, while the policy thrust is important, the relationship with the sponsor bank has to possibly evolve and change in a different direction. The old kind of relationship where there was a dependence on the sponsor bank, there has to be a creative solution to that. And one of the creative solutions you proposed already in terms of, possibly hiring the chairman from, from outside, from the market, so that the dependence on the sponsor bank doesn't remain as much as it is today. So that's a very, very, sort of creative solution. And I think...
yes, Gauravji, that's what I think what we saw is even the RRB staff was demanding even today. All RRBs have ATMs linked to their sponsor bank.
Right.
Why not RRB have their own ATMs? Why not? They have equipped with that things. They have technology imbibed in their systems. So this is how they want to evolve. So that's good. That's nice what they're thinking about. Yes, Raghuji.
Total disconnect from sponsor bank is not recommended. I think we should not be pushing for too much of reforms at the same time. Sponsor banks have been a solid strength behind the RRBs, be it in technology or be in providing top management or executive support or problem solving on a daily basis. So they have delivered. They have delivered goods. Of course, when you see relationship between a sponsor bank and an RRB, you naturally feel that a big brother always takes something out of the small brother's hands. That is a regulator's job.
Right.
Regulators should be tightening the nose that don't exploit the institution. So long as that regulator and supervisor takes care of that, let the sponsor bank maintain the arm's length, provide all the support services, then it is a solid institution behind you. See, I would like to go with the aura of an SBI, an RRB which is promoted by SBI. I would like to go with an aura of SBI rather than say I am independent. It definitely adds strength to the RRB's, even the logo for that matter. Of course, now the logo is getting changed. Right. Second part is with regard to the financial transactions between them, there has to be transparency and there has to be some fair dealing. It should not be like market forces are driving a PSLC somewhere, but the sponsor bank purchases at some other rate. That should not happen. So that kind of thing, I think a regulator is very much aware. Enough guidelines have been given. That is not a major issue, I would say. But totally delinking sponsor bank from the RRB, I would not recommend. Not immediately.
Great. So, so while you're on this subtopic of complexity in the way in which RRBs operate and their complex relationships with various players in the ecosystem, which is, you know, the supervisor, the regulator, they have various issues in terms of how they operate in a small geographic area. Banks primarily work and operate on the principle of diversification, whereas RRBs, by their own definition, are restricted to a particular state. Raghupati ji, we've had that, you know, brief chat where you were talking about RRBs now with the numbers coming down to 28. They've had a scale which is pretty high. Rakesh ji also mentioned that, you know, the largest RRB being bigger than Punjab and Sindh Bank in terms of numbers, in terms of balance sheet size. One relationship that one can't do away with in the current state and form is the relationship with the state governments. How do you see that as a challenge in RRB's futures? You know, for various RRBs, the state government, while may not have played a very constructive role, they have some role to play, and I would like to hear your views on how that should evolve over time.
Shall I take it, sir? State government as a stakeholder, he has contributed 15% to the capital. A very reluctant customer, I would say. He will be the last person to contribute the money after a lot of reminders. They have board positions, 2 board positions, rarely attended. Many times RRBs, I have instances where RRBs have gone to the collector's office or the board member's office and let us have the board meeting here, sir. The ante-room board meeting will be going on. This man will be sitting in his cabin and clearing papers or conducting some other meetings. So state governments have been a passive owner of the RRBs. If at all you look at the way in which state governments have seen, their first preference has been cooperative banks because they feel their ownership lies with the cooperative banks. So whatever capital and other facilitating measures will have to be given, they have given there. When it comes to keeping liquid funds or the surplus deposits, the preference has always been the commercial banks and much later private commercial banks. So RRBs are not in the picture except in implementation of some of the state government programs. So this has to, can you compel them to change? It is the attitude. It is a question of attitude. I have a stake, 15%, but then I don't get involved in this. So either allow them to be passive. At least they have not troubled you. They have not interfered in your work. So to that extent, let them continue.
Except the farm loan waivers bit.
I think that's right. From my experience and the study which we did, state government means when I was at a DDM level, there used to be this DM, CDO, and then DLRC, DCC, and BLBC. Everywhere the state government was there. Now RRB is doing all the job of the state government schemes. So that's a catch point. And now they are speaking up. When RRB is doing all the work of state government, why not the state government also have a reciprocating faith in the RRBs? Why not place their funds over there? So that's one of the things is there. So what we feel is, I think sensitization of board members needs to take place. Earlier it was a CDO or other people there down the line who were the member of the board. Now it has become state level, either a ACS or a principal secretary or something of that kind is on the board. They are very busy people, very senior people. So why not make state government more involved, more sensitized by way of whatever exercise NABARD does or RBI does or State Financial Services does. But that is going to bring a hell of a new dimensions to the operations of RRB. Now state government is waking up. Yeah, this is something which can deliver me goods. मेरा ये सब टारगेट पूरा कर देता है, क्रेडिट किसानों को मिल जाता है, and branch opening is also taking place, inclusion also taking place. So I believe if that part of sensitization of the board of directors is properly done, or selection of the board of directors from the state government is done more professionally, ACS level person to find time and talk to our board may be too much of a thing to call for. That little tweaking could give us a good result.
I think that's a very valuable input from you, Rakeshji. I mean, it's not a surprise. It's not something that's hidden from public knowledge that the economics of RRBs is fragile. There have been reasons why these amalgamations over time have happened. Why these, the number has come down from close to 200 to 28 today. But you make a very valid point in terms of the RRBs are contributing heavily to the workload, the social objectives, the various schemes that are driven by the government. The delivery of those schemes is dependent in a large way on the RRBs. Then why should we not have even the most basic advantage of being a partly government-owned bank? Why should the float be enjoyed by other banks? Why should the government not keep its own balances, its own accounts with the RRBs? If it's good for the masses, it must be good for the government as well. Swati, you would like
I just wanted to say that, mostly by design, but what we have resulted with is a primarily retail bank, which in itself is a lot of advantage. I spent almost a decade in ICICI Bank. Everybody talks about the reverse merger, how everything changed for ICICI. The retail is a key engine of growth. For whatever's transpired in the last 50 years, that has led us here. How do I use me being a primarily retail player to my advantage is what is going to define my next decade.
Sure. So clearly,
I'll just add one thing.
Yes.
Now that we have come up to state level, it is UP State Cooperative Bank, or Madhya Pradesh State Cooperative Bank, or Rajasthan State Cooperative Bank, RRB. Now the state government will be, this is Rajasthan Gramin Bank, bhai, hamara hi bank hai, something of that kind. Why not be more? Pehle wo district level ke naam hote the, ya kuch regional names were there. But now that it has become a state player, now the state government is wakening up. Only we need to give a proper guidance to state government to make it more proactively involved in thing. That's it. That's what I believe. For tinkering, guidance, mentoring would make a lot of difference for the. And again, important thing is now NABARD has put a one logo and one tagline for all the RRB in the country. So that also is making a difference at the national level.
Sure. So clearly there is intent.
Just a small piece on the logo and tagline. The way NABARD went about it is they asked everybody to vote what the logo should be. That is the kind of customer connect and ownership that you can. It's a way to show what kind of this is my bank, and therefore I have full rights to vote on what the logo should be.
Great. So we have about 20 minutes or slightly less than 20 minutes remaining. I can see 14 there, but I know we have about close to 20 minutes remaining. So I'll steer the discussion now towards what should the future of RRBs look like. We've discussed a lot about what's gone well, what's not gone well. We've kind of heard the panelists saying that they have met their objectives to a very large extent. There are some shortcomings, some structural issues which need to be dealt with, and the fact that RRBs deal with the rural economy, which itself hasn't done well or as well as one would have expected in India, despite all the attention that has been paid to the rural, ecosystem. Uh, my question, very broad level question is, if RRBs did not exist today, would we still design them, or would we design something else? And as we go along in this discussion, I'll ask you very pointed questions in terms of your suggestions on the way forward. But if this is the broad question that one has to kind of think and debate about, if RRBs did not exist today, uh, would we still design them, or would we kind of design something else? And that will potentially help us lead to a few pointed questions. At the end of the day, what I'm interested in picking your brains on is the kind of reforms, one reform from each of the panelists in terms of one reform that RRBs must undertake in the next 5 years. One thing policymakers, in your opinion, have consistently misunderstood about rural banking or rural credit. And thirdly, will RRBs matter in 2047? The final verdict from you in the form of a yes or no. But I would love to hear from the panel on, do you think, given what we are aiming to achieve as an economy, the importance of rural economy cannot be overstated. It is important, and institutions will be required. But is RRB the right institution? If you were to design something today, assuming RRBs did not exist, you feel you would still design an RRB, or you would design something else? And if we were to continue with an RRB, then what kind of design features, what kind of incentive structures, what kind of expectations should one have from this institution?
Thank you. Very interesting question. We are at the 50 years cusp of a landmark. If RRBs were not there, what would have happened? Just look at the coverage, 33, 28, 29 crore savings accounts or deposit accounts, and 3 crore loan accounts. 33 crores, nearly, you would say around 30% of the country is covered by RRBs. And these are the lower bottom of the pyramid. Definitely not middle, definitely not top. So financial inclusion would have been little lesser. Maybe push on the commercial banks would have been greater. Market forces have already decided to bring in lot of new institutions. You have SFBs, you have local area banks, which did not succeed. You had Mahila Bank, which did not succeed. You have fintechs, you have NBFCs, you have MFIs. So market has evolved. Regulators, government have been thinking, and they have brought new institutions. Not that RRBs have been indispensable, but they have been a very important player. If you look at the entire financial inclusion sphere itself, they have contributed significantly. Their share has been significant in respect of every initiative that you have in financial inclusion. But where they have to change, today, sit back and see what you have accomplished, pat yourself, but at least you have to double or triple your efforts. Digitalization, infrastructure improvements have come, innovations in delivery. You need not be in the village to deliver or service the rural people. You can be sitting elsewhere, but you can still touch the people. It is a service which has to move, it is a products which have to go and connect. You have to connect better. Today's connectivity is still more, you expect the customer to come to the branch, you are not going there. You have to go. SHG made them go, BBV program made them go, JLGs made them go, but slowly that has also come down because of the technology. Probably air conditioning of the offices is a bad thing. You should not air condition the offices so that people get out and meet the people. People will have to be connected. So that is where you have to reduce, rationalize your branches, reduce the brick and mortar branches, and enhance your digital connectivity, and analyze every family. That is, you have to literally take control of that family as far as their financial banking service requirements are concerned. By this alone, you can quadruple your business.
Wow, that's a very interesting point to make. Not just focus on the person banking with you, but also think about the family that's behind that customer that you're banking. Wonderful. Great. Sir, you would like to say something?
I think Raghuji said it all. You had a very interesting question. I would say if RRB were not there, I would say what if IIMs or IITs were not there in education system? We can't think about our education system without those elite institutions which have given wonders to national development. The same goes for the RRB. Though their quantum or the color may be a little different from the rest of the banking sector, but yes, please go and ask the farmer. Please go and ask that SHG woman who has been able to get the credit. Please go and ask any small entrepreneur. Rather, during this study, I met one lady from the Kanpur. She had been to the Prime Minister's office and met over there. So she said, मैं कभी district से नहीं निकली और मुझे प्रधानमंत्री से मिलने का मौका मिला thanks to RRB.
Wow.
So things are changing.
Right.
And yes, a lot of things have to be done. And it's always there. Change is always a constant factor which has to be there to make things more vibrant and more efficient. Yes, RRB started with a different note, low cost, salary less, and all those things. Now they are at par with all the commercial bank services and pay and perks. And now they are able to meet it. I believe, I have confidence in RRB that given the proper tinge and the flavor which they are going, small tweaking in the policy could result a very good player in the financial sector. Let's have one good financial sector in the country, nothing wrong in it. Because RRB has link and touch with the organic people at the ground. That is something very unique. HDFC, ICICI may be the biggest banks in the country, SBI is a different story. Yes, but their touch, their customer base, which they have built over 50 years, is something very invaluable.
Great, great. So from what I'm hearing between you and Raghupati ji, Mr. Raghupati, you are suggesting that the RRBs take a more digital intensive approach, and Rakesh ji, you're of the opinion that they have already built very deep connections with their clientele, and they must continue doing it in the same way, or do you also see a role of digital initiatives in RRB's future?
I think they are aware of this thing. They want to go for a lot of innovations.
Okay.
They have tech savvy, they have become. All their accounts have become online and everything is there.
Right.
They are learning a lot of things from sponsor bank. As Raghuji was saying, ki yes, sponsor bank ki abhi mentoring, they are doing well. Yes, but let them give more freedom. Let them give more impetus. This is what I said. Technology, marketing and research. If these elements are imbibed in RRBs, they can become a world-class player any day in my dream. That's what I feel so.
Great. Before I get to Swatiji, I'm sorry I've not come to you in a while, but I just want to get, just one point from each one of you on the question of what do you think, and you're from the supervisor's side or the policy making side to a large extent, your careers have been in that space. What do you think the policy makers misunderstood about rural banking, rural credit? If there was anything, despite all that good that has been done, if there was one thing that stands out for you, what would it be for both of you? And then I'll let Swatiji respond to with her views on what kind of work they're doing right now.
Two things. Specifically with regard to RRBs, it is copy-paste of commercial bank policies. Nobody wanted to think. Commercial bank ki jo hai, yahan kar do. Even if there is a concession to be given, it is what commercial banks are doing, okay, you also do that. So, there is no separate circular for RRBs either from RBI or Government of India. It is all what is there for commercial banks come to the RRBs. So, this is where we are, even now, when you are looking at, we are trying to compare these 28 banks as they are bigger than commercial banks. And why are we comparing even? RRB should not be compared with commercial banks. They are scheduled banks, comparisons to stop there. They are essentially a rural bank and their ethos should be different than a commercial bank. Commercial bank is for making profit. They have to meet the requirements of the industry and business and probably entire banking requirements of the country at the macro level. But RRBs will have to look at the last man. So that change in thinking, attitude will have to happen at all levels.
Yeah, I think I'll just like to say what is wrong with RRB, nothing wrong in RRB. over a period of time, they have changed. Amalgamation is one of the very major steps which the government of India, NABARD and RBI took. That's good, nothing wrong in it. What I feel is, if more professionalism is imbibed in the board of directors of RRB, it's a small sentence but a big meaning, if that is done, probably we have a totally different player with us to work in the rural areas.
Thank you.
I'll just answer this in two parts. The first thing in terms of I think we've all answered of what if the RRBs didn't exist for what would it be? I think it's been really well answered. I feel our technical session would have been how do you ensure you reach people as opposed to the engagement story that we have today. So in terms of the three things for RRB, I would say first is about focusing on engagement. My fellow panelists, Sir said in a different way, saying family as a unit. Saying you have a very strong customer base. Let's figure out on deepening that relationship. Second, maintain my advantage of cost to serve, because I have that unique advantage, which is why I said, you don't have to compare RRBs with anybody. They can build their own business in their own unique way, because I have that distinct advantage. I can build further on that in terms of technology. Finally, in terms of their ability to mine the rich customer data that they have. This was referred to in the panel. That is gold. And that allows you to serve them in such a diverse way, the full life cycle approach you can do. And what we've seen with the RRB is that they are very open and B, I would say, hungry for doing that. So build capacity around that. I think those are the three wish lists. Might not be pure play reforms, but I would say that NABARD, as in their development role, is addressing this in different ways. But I think the ability to maintain the unique characteristics of RRB and help them build on that.
Great. Thank you so much. So that's clearly something common coming out of the three panelists here. Mr. Raghupati, he mentioned that, RRBs now need to have their own social innovation space and R&D space. Rakesh ji, you mentioned that, there's more professionalism required on the boards, and, RRBs are bound to have a great future. So I guess, Swati, like you mentioned, the data needs to be utilized, those relationships, again, syncing with what Raghupati ji said. The relationships are there. Now we need to bring in the data element to make it even stronger. So clearly my question is redundant. Will RRBs be still required in 2047 for the Viksit Bharat mission? The clear answer from the panel here is yes. I'll take a minute or so to just synthesize this entire discussion. So today's discussion reminds us that RRBs are neither failures nor finished institutions. They've solved a critical problem in rural India, which is of access. The question now remains of relevance. The future of RRBs may not be about scale, but about clarity of role. Whether last mile specialists, digital enablers, or niche banks in the rural spaces, the choices we make now will decide whether RRBs remain instruments of inclusion or as mere footnotes in India's banking history. Thank you to all my panelists. This was a wonderful discussion. I really enjoyed and learned a lot from this discussion. Thank you so much for your time.
Thank you for that wonderful discussion. May I request you all to please join us front and center for a group photo op. And we also have a small token for all of you, which our team will hand over. Once again, we thank all the delegates who have participated in this session. We'll now have a short break.